Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Friday, May 17th, 2024. For economic reports, we had the leading economic index dropping 0.6% in April. I believe it was so negative 0.6. The last reading of this was -3, and the expected was -3. And so this is still showing, this is starting to look to me like evidence of accelerating slowdown here. Moving on to the charts, this is the S&P 500 SPX. I heard Gareth Soloway on his show talk yesterday about how he hasn't seen lighter volume in a single day of trading for several years, and he reiterated today that this past entire week was also extreme low volume, and the entire week breaking through to new highs sort of indicates that retailers are the ones that are buying here, and the pros are just waiting to see how high it can go before they short it, I guess. And I mean, it does seem pretty obvious to me and a lot of other people that are watching these charts and paying attention to everything that's going on. And I agree with them. I see it in my crystal ball. We're going to take a look at HYT next. This fund, again, represents high-yield corporate securities. These are companies that have to pay more on their debt because they're considered to be higher risk of default in general. And I noted on Thursday we had a huge, very engulfing candle that engulfed over a week of candles beforehand, and I said this looks like it wants to break down, and today it's showing more evidence of breaking down. One thing that I didn't mention yesterday that I think I should have was that treasuries were actually going up in price while this was going down, and so that, again, that's a run to safety. And so if this continues to play out where we have this continuing trending lower and you have the value of treasuries going higher and the yields of treasury securities going lower, you know, this is smart money if it continues that way. And I am assuming that's going to happen, but if it does, then it's safe to assume that there is a run for safety at this point. It's like starting here, at least, you know. I mean, admittedly, back here in you know, I talked about at the about halfway through April, you know, I kept talking about for a week or two about this looking like three black crows here and how like crazily bearish it looked. And then we got to the top of this candle here and then broke right through it higher, and I'm like, what is going on? So, you know, the question here now is it going to start looking like a pattern of higher lows and higher highs, this being the low and then this being a top, and then is this going to be a higher low, or are we going to see a lower low? And so I'm really going to be especially paying attention to this point here, which would spell to me much greater and sooner bear market coming into play here. In the meantime, metals are just going up. Both copper and silver had a very good day today. Copper miners are up 4.7% today. That's a pretty big move. I talked about this being a bull flag here, and if you grab this this pole here and you stick it on this end over the breakout, we're pretty much to the top of there. And so it's just, you know, it's interesting how these patterns can often play out like clockwork. If you follow silver, you may have noticed today that we broke to a multi-year high in the price of silver. So silver bulls that have been waiting for a moment like this for a while, and you know, there will probably likely be. I know there's a lot of shorting that goes on in the silver markets, and so this could easily turn into some kind of short squeeze where copper goes maybe even higher than it's ever gone before. You know, back in 2011, the silver price here looks like we got up to $49 an ounce. And before that, believe it or not, TradingView is great. It goes all the way back to 1980 when you had those. I think they were brothers that like took over the whole market, that brought it up to $48 all the way back in 1980. Incredible what can happen to the silver market every once in a while. Is that, are we going to see another spike? Are we going to see a leg up that stays? I'm not sure, and I'm staying away from this market just because I don't like the risk and the reward. One thing to, for example, check out, I don't know if you can see on the screen, it's pretty small, but in 1973, 1974, we had a very large run up to a peak all-time high. And if you look sideways here, yeah, we had a huge spike after that. And then all the way from the 1990 until about 2002, 2003, so we're talking over a decade, we still were we were for the most part still under the top price of 1974. And so, silver, it's a very, the pricing of silver is very herd mentality, and can you predict what the herd's going to do especially when things are obviously high and going higher? It's a game of musical chairs, and if you want to play, have good luck and have fun. And that's all I have to say about silver at the moment. I was in silver when I thought it was undervalued, and I got out when I felt like it got up to about around what I considered personally to be a somewhat normal price. I believe I said around like $20 I was looking at. I got in very low and then got out, I don't know, between 20 and 25, somewhere in there, I believe. Maybe it was 25 I got out. But anyway, I mean, yeah. The last chart today is TNX, the 10-year yield. This one I've been talking about in a lot of videos lately, how we've been in this perfect parallel channel, hitting the top, hitting the bottom, hitting the middle of the channel, hitting the top again, hitting the bottom, and we finally, very recently, broke through to the downside. This typically means, we could easily get back up to this line, and then it would be highly expected to continue down from here. And if you look at the larger pattern, it being a bear flag, we could end up going, I see below 3.5%. It seems extreme, but I don't think that that's out of the cards. I mean, where are interest rates headed longer term? This is like the real billion-dollar question. I just watched a video on Heresy Financial. If you're watching this video, it's likely you've seen at least a few of his videos. He recently did one on how the debt of the U.S. government, the fiscal deficits, are becoming kind of too heavy for the country to be able to hold, and how that's going to lead to a new part of what you can call the long-term debt cycle. He talks about it, same with Lynn Alden, as if this is like going to play out with like 100% certainty. And I have a lot of doubts about that. One, I have several good arguments about that, but I understand the arguments on that side. I think pretty soon, if I have time this weekend, hopefully, I want to go over the arguments on both sides. What could end up playing out to, what are the things that could potentially push interest rates higher and higher and higher, and the opposite. What could potentially push them lower and lower? If you've been watching this show, I'm a bond bull right now. I think that the yields are going down, and I think there's better arguments for that than there are on the other side. But yeah, for now, that's all I have for today's show. Hope you enjoyed. Thank you for watching. Robschild.